Good morning, ladies and gentlemen. My name is Greg McGlosky from ForexLive.com. Today's date is January 4th, 2023. I'm going to take a look at the Forex market from a technical perspective. We'll start by taking a look at the euro versus US dollar. Yesterday, we saw the euro versus US dollar move sharply to the downside as traders returned from their New Year's holiday. And then we saw a rotation back up to the upside where the market came into near the 50% retracement of this move up from the December 7th low to the high that we saw on December 15th or thereabouts. This level also corresponded with the swing area between the 10584 and 10594. That area defined by these swing levels through here. We've seen them all before, and we may see them again, but in trading here today, what we did see was the price move above that area, and we moved right up to where the 100 and 200 hour moving average. First, the 200 hour moving came in at 106.328. The 100 comes in at 106.394, and we had willing sellers leaning against those levels. Why? Because risk can be defined and risk can be limited against those levels. Sell against this level, stop above here, risk this amount, hope to make a little bit more than that, and that's what traders did at this high level, and the price rotated back down toward this swing level again that we've revisited yesterday and we broke through today. So this area is now going to be an intraday support level, and we'll see if the sellers can continue its bias move seen in the early European session to the downside, or do we bounce back off this level and start to move back toward the 100 and 200 hour moving averages? The choice is yours, my friends. Pick your poison. Would you rather be long the euro versus US dollar or short the euro versus US dollar? We have the levels are defined here from a technical perspective, and they will certainly, hopefully, give you a clue as far as the directional bias for not only you, but us going forward for this currency pair. Let's take a look at the dollar versus yen. And in trading yesterday, we saw a very choppy action, especially in the New York session. Well, we did it all day long. The Asian session saw the market move below these low levels through here and extend down to the 129.498 level. That was the lowest corrective level, going back to the daily chart all the way back to this period right through here, which is in June of 2022. So we fell below these lows here on the daily chart in trading yesterday, but could not sustain the momentum when we started to move back above. Remember this level 130.38. Let's go back to the hourly chart here, and we'll put it on a line at 130.38 right here, right through here. Probably had it in there before, but anyway, it's right around that level right there. And you can see in trading here today, we did move back below this low, this shorter term swing lows from the month of December, and moved below the 130.38 level. But we are moving back to the upside as the market kind of wanders and figures out its way. What we do know from the dollar versus yen is that we have the 100-hour moving average above at 131.31, which is a nice, easy number to remember. The last time the price traded above it was right here back on December, I guess, 30th or 29th or somewhere around there, and the we fell below it and it came back up to test it, and then down goes Fraser all the way to the downside over the last few days of the calendar year and into the new year. But we are trying to see a rebound back above. Watch the 130.38 level. Watch 130.55 level. That area for support. If we do find support against that level in trading here today, we could see a rotation back up toward the 100-hour moving average, and we'll see if the price can get back above that level. In the sterling versus US dollar, we're just breaking below its cluster of moving averages here. The cluster of moving averages is defined by the 200-day moving average. That's this step green line, as you can sort of barely see it right there. The blue line represents a 100-hour moving average, and the green line, this more smooth green line up here, represents a 200-hour moving average. And as you can see, the market came down to those levels the last few hours, found support against those levels, rotated back to the upside, but now we're breaking below the levels in the early U.S. Trading session, which is tilting the bias more to the downside. We're going to need to get it back above the 120.41 level to give the buyers more confidence in that direction. The high prices here today tried to get above the high prices from yesterday's trade, but could not sustain momentum above those levels, and it started to lead to the leakage to the downside here. Helped also by the euro's declines, kind of following each other in that directional way. But on the downside, watch this area. If the market continues its rotation to the downside, this area right through here, earmarked as a key support level for the sterling versus US dollar going forward. A number of different swing lows through here, as you can see. And trading yesterday, we moved back above that level and then rotated back below the level and reused the level as resistance through here. So, and then in trading here today, we started to use that level as resistance. The market couldn't sustain that momentum once we broke above it right here. The market found the sellers turned to buyers and the price started to rotate back to the upside. You can expect that if we move further to the downside and we come down here, we might see further support against that level. It just is what happens. So look for support buyers near the 120 level, 120.10 down to 119.91 are the swing levels for the sterling versus US dollar. Let's take a look at the dollar versus Swiss on the hourly chart, and you can see this this pair had a roaring start to trading yesterday as traders came back from the New Year's Day holiday and with a big sharp move to the upside here. And then a rotation back to this swing area. Then the market rebounded right back to the upside and trading here today. We moved below those levels through here and down to the 200 and 100 hour moving averages. In the process, the market moved below 0.92767 level. That was the 100 hour moving average, 200 hour moving average, 0.9280. We are trading above and below both of those moving averages over the last few hours of trading. So the market is trying to figure out which way it wants to go for the dollar versus Swiss. Look for momentum. Right now, we're trading in between those levels. Finally, I'll take a look at the dollar versus Canada, that currency pair on the hourly chart once again. If you look back at last week's trading, we used the 200-hour moving average as resistance. That's the green line in this chart right here and right here. And we also found somewhat resistance sellers through here. We spiked above it in trading yesterday and then fell right back down below it and moved down to a new low and then spiked back above it in very volatile trading. As you can see, this range right through here is the wide for the dollar versus Canada. Lots of ups and downs and ups and downs and ups and downs, ups and downs. And in trading here today, we saw a rotation back to the downside after testing near the highs of these swing areas at the highs and rotated back to the downside, fell back below the 100 and 200 hour moving average, tilting the bias back to the downside with support right through here as the next key targets on the downside for the dollar versus Canada, as long as the price can remain below the 100 and 200 hour moving averages, which are converged at 135.75. So there you have it. Look at some of the major currencies pairs as we start our trading day. I hope that you found them helpful in defining your risk and bias levels going forward. Still not out of the woods as far as figuring out which way we want to go for a lot of these currency pairs, for the dollar, for so on and so forth. But that's trading and why you trade. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.